About 2 minutes away from the end of the trading day, Matt Miller and Katie Greifeld here in for Romaine Bostick and Scarlett Fu. And here to help us take you through the closing bell, a global simulcast. We're joined now by Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Carol?
Doesn't anybody know it's ice cream day here at Bloomberg? We like Fridays to be mellow and quiet. And I know we had a jobs report, but usually it starts to mellow out after the report. And that has not been that case at all. And I feel like get ready for another week, because even though the trade deadline was today, we're going to still get, there's more terms to be worked out. There's delays, extensions. Uncertainty still exists for investors, and we certainly saw that play out today.
Yeah, trade's certainly part of the story. A big part of the story today, too, are the president's continued attacks on the Federal Reserve, now extending those attacks to the Bureau of Labor Statistics after getting data that he didn't necessarily like, calling those numbers rigged earlier. We've been talking about that throughout the program. I should note we spent a lot of time talking about what's going on with treasuries today and what's also happening with stocks. Don't forget about the crypto market. A sea of red there. Bitcoin down another 2%.
Yeah. I don't know. I feel like the bond market is a little bit more urgent today, Tim. Really,
it's still $113,000 for a Bitcoin.
Yeah, Matt, you should go find those that key for your Bitcoin so you can do something with it.
But 27 basis points on the 2-year Treasury yield. When was the last time we saw that? August?
Unbelievable. The moves.
Yeah, it's been at least a year. All right, 15 seconds to go until the closing bell right now, and we are looking at drops that we haven't seen since May, or actually a little bit of a recovery into the bell here. We were down at one point when we kicked off this program at 3 o'clock, 1.7% on the S&P 500. Nope, we're still down about 1.6%, so almost that. 62.37. Yesterday we were above 6,400. The Dow Jones Industrial Average. I'm looking for Dow 50,000, and right now we're trading down to 43,588. The Nasdaq, the biggest loser of the bunch, off 2.25%.
Yeah, quite a narrative reset, right? And you've got traders now adding to bets on Fed interest rate cuts in September. Who'd have thunk? S&P 500, though, guys, most names in the index lower today. 358 to the downside, Katie, 145 to the upside.
Yeah, let's take a look at the sector breakdown here. A lot of red to talk about. You have big tech is the biggest decliner on a points basis when you take a look at sectors. Consumer discretionary also taking a big hit as well. If you are looking for a bright spot, there's a little bit of green there in healthcare. A lot of that coming from Eli Lilly. There's a plan that U.S. health officials are considering to expand Medicare weight loss coverage to GLP-1s. So you can thank Eli Lilly for that little bit of green on the circle, Carol.
That's mostly a tomato that is largely ripe. I'm just going to say that. Let's get to some of the individual gainers. And there are some big ones, which reminds us that even in a market where there's volatility or it's down on the day, that there can be some outperformance. Always happens. So I'm going to go to what is the top gainer in the S&P 500. Ticker is MPWR. We're talking about Monolithic Power Systems. This stock soaring in today's session, up about 10.5% here at the close. It's a semi-device company, $37 billion market cap. It did come out with its second quarter results, and they did beat expectations. They also gave an outlook that was above the analyst consensus. It's a stock that's been outperforming this year. It's up more than 30%. First Solar. Who'd have thunk? This one, too, is the third best performer in the S&P 500, up as much as 8.5% earlier in the session, finishing the day with a gain of about 5.3%. The renewable energy company boosting its net sales forecast for the full year. We got these numbers after the close last night. TD Cowen raising its price target to $220 from $200. Stock closing just below $184 a share. The CEO coming out and on the earnings call said First Solar is in a greater position of strength after the passage of President Trump's tax and spending law than it was following Joe Biden's landmark 2022 climate law. He says he sees the Trump law driving demand for its domestically produced solar panels, and says that the law places restrictions on manufacturing tax credits for products tied to China. So something to remember amid this tariff trade war, if you will. And then got to mention Reddit. Thank you so much for Tim saying you got to do this one. It's up about 17.5% after the close here. The company reported its most profitable quarter to date and projected third quarter sales that far surpassed analyst expectations, signaling the strength of its growing ad business. One analyst at eMarketer said Reddit is finally figuring out how to monetize eyeballs, not just accumulate them. So investors definitely like this one. Tim?
Okay, some of the gainers. I got some decliners here. I want to start with Amazon because shares fell today 8.3%. The company shed over $200 billion in market cap just today. Amazon projected weaker than expected operating income and trailed the sales growth of some of the cloud rivals that we've already heard from. Andy Jassy, the company's CEO, remember, he was in charge of AWS until a few years ago. He said it was, quote, very early days in AI, and that the company's efforts to lower the cost of running AI apps would draw more customers over time. We spoke to Laura Martin over at Needham a little earlier in our program. She said it was very strong revenue growth, very strong EPS and margins, but that tepid guidance really got investors. Also, some concern about the next shoe to drop when it comes to tariffs. Moving on to Apple, shares fell 2.5%, but earlier in the session, up as much as 2.9%. The company did report its fastest quarterly revenue growth in more than 3 years. Revenue rose 9.6% to $94 billion in the fiscal third quarter. The number of iPhones and or I should say the amount of money brought in from iPhones just blew past expectations, more than $4 billion to the upside there. Still, shares fell 2.5% today. And finally, Coinbase shares down close to 17%, 16.7% to the downside. The company did report lower than estimated second quarter revenue amid a drop in digital asset market volatility.
All right, so those are the gainers and losers in equities. Take a look at this yields board. Now, you'll note first off that the color is green, but don't let that confuse you. We're looking at huge drops. I mean, this should be blood red. The U.S. two-year yield falling 28 basis points in one day. We haven't seen a drop that big since March of 2023.
Well, this is good for the people who hold those bonds. They're probably psyched. This is a green day for those bond investors.
No, I agree. If we were showing the price, it should be a green arrow. But we're showing the yield, which is coming down, 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 down. So it should be red.
An enormous rally there. And you can see it's really concentrated in the front end of the yield curve because people are really solidifying their bets on a Fed rate cut in September. It's interesting to sort of thought exercise what would happen if we had gotten this data prior to that Wednesday Fed meeting, but I think we should talk about tariffs a little bit too here because it's been the economic data that has really dominated the discussion, but we have to, of course, loop in the trade picture as well. I think it was really telling. Matt brought up the number at the top of the close that the average tariff rate, the average U.S. tariff rate, I believe now is 15%. You compare that to where we entered the year. It was in the twos, you guys.
Yeah, exactly. It's 6 times higher than it was a year ago. And you're talking about the steepest tariffs that we've seen going all the way back to the 1930s. The other thing is, we're not done yet, right? We don't know all the specifics. We've got some big trading partners, whether it's Canada, whether it's China, whether it's Brazil. We have some extensions. So there is still more to be known. And, it's a higher rate, but we have some details still to come that could even impact maybe even more severely when it comes to growth, certainly global growth.
It's a good point that we aren't at the end of this story yet, right? President Trump yesterday said Switzerland is going to pay 39% tariffs. Now, first of all, the country to which you apply these tariffs doesn't actually pay them. It's the importers, the companies and the consumers that buy these things that end up paying the tariffs. But he can't be persuaded to point that out. And obviously, it's not going to stay this high. They're not going to keep 39% tariffs on Rolex watches and Lindt chocolates because Americans want those goods at lower prices.
But Matt, the president has been clear that he wants to solve trade deficits. That's his end goal here. That's what he wants to solve for.
And he wants to raise revenue, right? And he wants to bring production to the U.S. But they're not going to make Rolex watches in New Jersey.
Well, they're also not going to make Levi's jeans in the U.S. We spoke to Levi's CFO who said there's no way we're going to move production of this stuff to the U.S. We know Apple is not moving iPhone production to the U.S. Yeah, maybe they'll do more in India, but we're not going to be making iPhones here in the U.S.
Right. That is certainly the case across industries. So we talk about potential motivations here. We have talked about in the past that these tariff levels are just being used as negotiation tools.
Exactly.
Maybe they're revenue raisers, but when it comes to whether or not these levels are going to stay in place, it kind of depends on how the negotiations with the specific countries go.
We know the playbook, right? The White House, the president puts, terms out, and then you get people come to the table, and then maybe it's not quite right, and then they go back and they put down new terms, and then people come back. So I don't know. We have to wait and see. I just got to say one thing.
Yeah.
Why did you pick on New Jersey, Matt?
Yeah.
What's wrong with that? Why can't we make Rolex watches?
I don't dislike New Jersey.
You've got two
Yeah.
Jersey girls. Can
There's
I
a lot
even
of
say
great
this?
stuff that's made in New Jersey.
Yeah.
Including me. So
Yeah.
there you go.
Yeah. I'm a little hurt. Maybe you should say Ohio next time.
The great state of Ohio.
Yeah.